The Gwart Show is sponsored by Ellipsis Labs. Ellipsis Labs is building a world where mainstream finance happens on-chain. Their first product, Phoenix, is a fully on-chain limit order book DEX on Solana doing hundreds of millions of dollars in volume. I know this team personally. It's one of the strongest in the space. If you're interested in working with a team that's here to stay, Ellipsis Labs is hiring engineers passionate about DeFi to join their team. You can find Ellipsis Labs on Twitter at ellipsis_labs or head to ellipsislabs.xyz to learn more and apply. Hey guys, today we are here with Uri Klarman, founder of BloxRoute, very well known for having frequent opinions on MEV and now has started a new venture. Uri, welcome. Would you like to introduce yourself and tell us what you do?
Hi, thanks for having me. Kind of excited about it. Uri, CEO and co-founder of BloxRoute. We can talk about what is BloxRoute in a second. And yes, I'm very deep in DeFi, very deep in MEV, and recently been working on a project called Palidin, which we're about to launch, basically to get rid of predatory MEV. Like, I think I finally solved how do we get rid of front running and sandwiching.
I think that you also are known for solving MEV like every week on Twitter.
You see how good I am? I solve it all the time.
Yeah, it's like a frequent occurrence. Okay, awesome. So what does BloxRoute do? Like what are all the activities in which you engage?
So a bit of context. So I did my PhD here at Northwestern University. BloxRoute is kind of like the crown jewel of my PhD dissertation. In 2016, 2017, I was doing my PhD on computer networks. And I was like, can we send transactions and blocks faster? And these were the block size wars debate and the Bitcoin Cash hard fork in 2017. So, and I was very much on the big blocker side, like of the debate. And so, I was like, if we could send larger blocks at shorter time intervals, could we scale blockchain? So the entire idea was actually scaling blockchains. So we built the infrastructure to send information fast at the time. And then in 2020, in the DeFi summer, all of a sudden, everybody wanted to see information fast and to send information fast. So all the traders, they wanted to see the price and to send their trade really fast to back then it was the mining pools, and to front run others and to avoid getting front run. So sending it like directly. So we did do nothing with scalability and turned out to be like flash boys for DeFi, right? The people who connected Chicago and New York with an optic fiber. And so we actually had like front running protection before Flashbot even existed. Okay, so we were deep in the weeds over there. Then Flashbot comes out, MEV becomes a thing. We run also a Flashbot relay, but like we're a for-profit company. Everybody uses us. All our customers start to say, oh, could you also support BSC because we trade there? We added support for BSC. Polygon Foundation actually paid us significant amounts in order to add support to connect to all their validators, and then later actually added support for Solana. And so I think at peak, we were routing 40% of all DeFi volume across all chains. So basically from the Wintermute and SCP and, the really large actor to, a tiny like solo searcher in a basement in Taiwan and anywhere in between. Then, roll forward to the merge and MEV boost. So we run two of the relays on Ethereum. We run in Block Builder, but more importantly, all the builders are our users and our customers. So we're very deep in that. Help build the solution for BSC. Like the MEV there. So I'm a giant DeFi bull. Like I got red pilled really bad about DeFi in 2019. We can talk about that. But that kind of like led into MEV and everything around that. And so BloxRoute nowadays gives basically the tools and the infrastructure to do all of that. Recently on Solana, we actually found, I think, our best product market fit to date. Like it does better than anything else. I don't know. Do you remember when Sol price crashed? Not yesterday, but 6 months ago or whatever. And everybody were trying to land their transaction because they were over leveraged or whatever. So it turns out that landing transaction on Solana, forget MEV, forget searcher, forget all of that. Landing transactions is the killer feature and the killer product. So we have our own infrastructure and we send it to Jito, and we send it through Stateway QoS, etc. So landing transaction fast and without dropping them and actually making trades go through is the thing that we do best at this point. So this is like our our key product, these landing transactions now.
Yeah. Okay. So like, let's go back a little bit. With regards to, let's just say post-merge, although you can certainly cite pre-merge, MEV. I often see you on Twitter, right? Like screeching about the current design of PBS and block building and MEV on Ethereum. But here's one thing I will say. Oftentimes, I'm not exactly sure what side you're on. Like sometimes I feel like you're on one person's side and another time you're screeching at somebody else. It's like, yeah, but maybe I'm also not quite as in the weeds as you are, obviously. But I just wanted to ask, like, give a overarching view maybe about PBS, block building on Ethereum, maybe. Yeah, go ahead. I was about to ask you two questions.
Don't do that. I have a very coherent view on this. It might not look like that from the outside, but here's the thing, okay? I am a giant DeFi bull. I want DeFi to compete with CeFi. Okay, that's my end game. DeFi should beat CeFi. And so ever since Flashbot came out and this idea of like doing this MEV auction, it became apparent to me MEV auction, whether that's PBS or a different kind of auction, is a negative sum game. It's not even a zero sum game. Okay, the idea is that if validators with searchers or without extract the most value that they can from DeFi, from LPs, from users, from etc., then DeFi suck. Okay, this value isn't creating value for people. This is extracting value. It isn't a service that somebody is getting. This is just this taking value from somebody else. If DeFi suck, then tomorrow it's going to have less and less liquidity and activity. Because if you have $1,000 and you want to buy ETH or you want to buy SOL, then you're better off buying it in Coinbase. You will get the current correct price. You send the order, this is the price you'll be getting. If you send it on DeFi, then you will get the worst possible execution, right? If price goes up, your transaction fails. If price goes down, you would still get the overpaying amount that you are willing to accept. And if DeFi sucks and it has less activity and liquidity, then tomorrow everybody are going to have less MEV. Okay, so this is just getting smaller and smaller and smaller. We extract the most value, DeFi suck, it gets smaller, and there's less MEV tomorrow. And so that's like piece number one. And piece number two, this solving it with intents and solvers and all this idea, like I have $1,000, can I, get some price or whatever, really boils down to RFQs, right? Request for quote. Basically, you will say, I have $1,000, and you'll get a quote maybe from Wintermute, maybe from SCP, maybe from another actor. And RFQs are great for a lot of things. But RFQs will never compete with CeFi, right? The price you'll be getting will be the correct price, plus, a few basis points of profit for the market maker who gave you the quote. They need to profit, and a few more basis points to, compensate them for the risk of holding it and giving you and getting sniped, etc. So this is always going to be worse than open markets, right? And so if all we have is RFQs, DeFi will never compete with CeFi. So my argument is that creating the most extractive thing, okay, whether that's like running the MEV auction and extracting the most value, is a negative sum game. And the solutions but people would do this, don't really solve anything. Now, here's something that I learned, not that I learned, but like really clicked for me 3 days ago. Using numbers from before the price crash, because like now, okay, I'm on chain. Talking Ethereum, because like MEV boost is more there, and we'll talk about Solana in a sec. Ethereum MEV is like $500 million per year, okay? Front running out of that and sandwiching is $100 million per year, okay? Stakers, okay, Ethereum validators have $100 billion bags of ETH. That means that if the price of ETH goes up 1% because we made ETH better, it pays better than 10 years of front running. Okay? If we don't front run and all the validators don't front run and we somehow make it work, and this makes ETH Slightly better. Okay. 1% better. We have two universes, our current universe and this alternative universe in which there is no front running and DeFi flourish and there is more of that. So 5 years from now, if the price of ETH, I think it should be, I don't know, 10x or 5x or 2x, definitely more than 1% higher in that world, then they will make more money. The long-term incentive for validators and stakers is not to front run, is their bags. Okay. And so the problem is the short-term incentive. And you can go down that right, but before I hog the conversation in that direction.
Yeah, no.
My take on MEV is that the current extractive mechanism is stupid and almost a psyop. Okay. This is not important. $100 million sounds like really big money. Not for the Ethereum validators and stakers. They will make more money by not front running. Okay. If ETH goes up 1%, it pays higher. Okay. And so, or 1% equal to 10 years of front running. 10 years. It's insane. And so my take is that we should find the design to incentivize validators not to front run and not to sandwich, not to increase their slices. I mean, say, increase the pie, and they will make more money. It will make DeFi better. It will be able to compete with CeFi, and we all go to the moon and we win.
Okay, I want to make you zoom out for a second. What does, and this sounds like just a layup question, but I do think there's some context that I often don't get from people who are so deep in the weeds. So I want to hear what your thoughts are on this. What does DeFi competing with CeFi look like for you? Like in an idealized world? Yeah. Go ahead.
Here's why I got red pilled on DeFi to begin with. Okay, 2019 Pantera Summit, head of the CFTC gives a talk, or chair of the CFTC, whatever you call it. And he gives a talk about his time in the White House at 2008. Okay, 2008, Lehman Brothers is about to crash. They sit in the White House and they need to decide whether they save it or let it fall. Okay, and they're like, we have the money to save it. We can even save 2-3 other banks. But if there are 20 underwater banks, we can save them. So we shouldn't save even Lehman Brothers because we won't be able to, we'll just lose the money. And so they need to decide whether to save Lehman Brothers or not. And they're like, okay, how many banks underwater we have? The answer is, we don't know, right? It's 2008. Everybody were giving mortgages, putting it together, slicing it, selling to the other banks who took it together, made a salami out of that, slice that. And there are, yes. That's an interesting insight.
All right, go on.
They did all of that. And so it's not like these books were open to the regulator. It's not like these are secrets. It's a private company. Like all the information was there. Only problem, it's in 1,000 different books of 1,000 different banks, and nobody know what the answer is. And so as history goes, they didn't save Lehman Brothers. They let it crash. We had the 2008 crisis. And 4 years later, they finished doing the books. And it was, you know what? There were 2 other banks. Okay. They could have saved. We could have averted almost the entire 2008 crisis if we had real-time insight into the financial infrastructure and the financial system. If this was happening in DeFi, okay, then all that information was there. That analysis would be happening ongoing. Everybody would have had insight into it. And again, this is not like secret books or something. This should all be open. It's just like in a million different systems. So in my view, DeFi, this idea of having a single, global, transparent, always on 24/7, 365 system, financial system for the world is a very strong, goal or a very strong selling point for us to reach. This would be a net positive for the world. Now, from that, so what does it mean DeFi competing with CeFi? It means we need to have DeFi pieces that are equivalent and similar to the financial system and make it gradually transition from CeFi to DeFi and have more and more happen there. In order to do that, the easiest thing we have is bank accounts, right? Bitcoin wallet is a bank account. You don't need, it's already better than having a bank account. You don't need to pay fees, blah, blah, which, why would you need fees? Also, settlement, you send money, bits go around the world in like under 120 milliseconds. Like, why would it take 3 days to settle anything?
Yeah.
And so that's that. But also, okay, we get lending, we get like, we're gradually getting pieces to DeFi, but price discovery still happen on CeFi. Currently, DeFi is this like sidecar being running around, right? Price moves in CeFi in real time, and then DeFi kind of catches up in Ethereum every 12 seconds, on, let's say, Solana almost immediately, but it's all happening there. I want liquidity and activity and price discovery to move to DeFi. So DeFi competing with CeFi is DeFi eating CeFi, okay? Gradually moving more and more pieces from CeFi into DeFi, because DeFi is a lot more efficient in a lot of ways.
Yeah, but I think that there is a difference to me between transparency, like, for example, with mortgage-backed securities and how they trunched all these and how there was just an absurd amount of risk, and that level of transparency not being there and causing just a disaster, right? Financial crisis. But to me, there's a difference between that vision versus trading on chain. And this, like, to me, when you talk about price discovery happening on chain, even the vision of Solana, which is data centers that receive transactions closer to where the event, if you will, is occurring, and can therefore beat the single box in New York. I just don't know how you ever expect to come to global consensus on the state of a ledger better than, I don't know, fiber optic wires that go to a database in New Jersey, right?
So first of all, even in CeFi, you have like 11 large like trading centers around the world, right? You have Chicago, you have New York, you have London, you have Berlin, you have Amsterdam, you have Beijing, Singapore. You have Hong Kong, you have Shanghai, right? So you have like, they're already global and they affect one another, etc. So A, that. B, you're right. Centralized system will always be more efficient than decentralized systems. However, our current centralized systems have a lot of inefficiencies, right? If you ever, like we're already seeing that. Okay, so like, it's closed 2 days in a week. So, maybe it's slightly slower on some things, but it's always on, right? And yesterday when price crashed and all the like the trading terminals for all the, for everybody went up, right? DeFi worked. So that's one piece. Second piece is, if you want bank accounts to transfer to being just wallets people control, then you need for them to be able to trade. Basically, these pieces kind of connect to one another and extend. It's not that the trading is the important piece. It's just that we want to move the entire system to being DeFi. So we need that as well. Okay, so otherwise you still depend on that. So you have an account, but basically the FTX example. Sure, it's trading crypto, but basically you take your money and you give it to some single entity and they put it in their internal account and you have no idea what's going on there. So it's not that trading on chain is that important, in my opinion. It is just one of the pieces we need to happen on chain. Bank accounts is one, lending and other products is another. Trading and price discovery is a third, and there are probably a million others because I'm a tech guy, not a financial guy.
Yeah, I think maybe this is probably just something that I'll have to wait and see on, because it's so obvious when you send a wire transfer. I mean, I've said this a million times, and everybody agrees on this, right? It's like the go-to, like when there's some VC who's like, "Oh, you don't think crypto is useful? I just sent a wire." Like, they love tweeting about this, right? This is their go-to. Go send a wire transfer and then tell me that crypto is not useful. So this isn't lost upon me. Like, USDC transfers wallet to wallet in 5 seconds is so clearly an unlock. But then we start going down further into the financialized aspect, and then you get to where you realize that like SCP and like Titan or RC, I feel like they've lost a little bit of their edge recently, huh?
They did.
What happened? Just side note, what happened?
That's another thing.
Go ahead.
I think it's not even me sharing. It's public knowledge, which I didn't even get the inside information. It's the public knowledge.
Let's go.
One of the things that PBS does is incentivize private order flow, right? If there is a transaction that pays $10 and all the builders get it, then, this is where the flashbot auction mechanism, like, oh, this one will bid 9.9, this will be like 9.95, and etc. And then like all the money will go to the validator in theory. That is BS. Okay, here's what's actually happening.
Yeah.
This works in 99% of the cases. The not interesting, boring, nobody cares about. Okay, then even over 100%, like builders subsidize the block. They pass all that value to the validators. But when there is a block pays a lot of money, okay, then they actually keep to themselves like 80% and pay like 20, 18, 25, like really low amounts. And how and why can they do it? If there is a valuable transaction from like some actor or etc., the builder, the big builder, okay, could go to send it just to me, okay? Give it to me. Don't give it to everybody else. And I will try to win with it. If I make shitload of money out of it, I will kick back half to you or 60% or whatever the percent is. And so they keep it to themselves and they try to win. And only if they see that they are not going to win, then they share it with the other ones because the actor really cares about the transaction landing. So if, taking an example like Titan, okay, and I really like these are people I work
Your
with.
customers.
I like them. They're my customers. Some of them are my investors. Some of them are my partners. Like it's not against them. I don't like the entire game that we're playing here. Their incentivized is to do this. We basically get rid of the mempool. The entire thing about transparency and permissionless and just send it to the network. Forget about it. Basically, you send it to a builder. The builder would try to use that, capture as much value as it can, and then kick back that to the user. And which again, I'm not against that. Like I'm against the system being extractive, but at least what did we do here? We started by making it the most extractive, and now we're making it, forget about the mempool, just send it to a specific entity. Where's the D in the decentralized here, in the DeFi part of like all of it? So what's happening to your question, the winners right now are those with the best private order flow deals. Okay. Why is private order flow so much more important than public order flow? Because public order flow, everybody have to bid the entire thing to the same thing. Now, let's say you have a block worth $100. I have a block worth $100, all of it with public information. And I get privately a transaction worth $10. So up until now, you bid 99.9, I bid 99.9, but now I can bid 105. I can outbid you because I have better with a much larger margin. Okay, like I kept 5, not less 0.1. I kept $5 here, and I still completely blew you out of the water. And this is the mechanism, and this is the dynamic we're seeing right now in the MEV, like PBS, MEV boost landscape.
And this is, okay, but would you then agree that this is actually worse than CeFi because they don't even have to execute at the best national bid, whatever it's called, right? Then like you don't even have regulations, right? So then, like, I don't know. This doesn't seem.
What are we even doing here? This is kind of
okay. So
from my perspective, this loses the plot, right? It's kind of like
I agree.
Okay, just send it to part of my life, freaking Robinhood or whoever, and that, or okay, you said like, oh, this is self custody. Okay, so have the like this is not decentralized and it is not permissionless in any way.
Okay, so what's the solution to this in your mind then? Let's just stay with Ethereum for 1 second. We'll transition, but what's the solution for Ethereum?
So we're going to talk about Palidin. I started thinking about Palidin in the context of Ethereum. It's to solve this problem. It's kind of like, listen, and I literally, the first blog post I think I wrote about like 2.5 years ago was like, listen, the long-term incentive is for everybody not to front run and not to sandwich. Just include it. Everybody will be richer. Okay. So this is like, if we had a magic wand to make it go away and, eradicate predatory MEV, which MEV is a big word, literally front running and sandwiching. Okay. That's the problem. Arbitrage is great. CeFi DeFi arbitrage is great. Correct the prices. Everybody will get the correct price. So the long term is incentive. The problem is the short term incentive, when I am, and it doesn't matter if it's Solana or Ethereum, when I am the proposer or when I am the leader and I'm about to make the next block and somebody sent me a trade, oh, here's $1 million USDC, buy me ETH with it or buy me SOL with it, it's going to move the price. I'm like, I'll just buy just before this transaction and I will just sell right after it. I will sandwich it and I will make $1,000. Now, it's true that this destroys $100,000, but it destroys it for everyone, not to me, right? It will destroy it for everybody. My share of all the ecosystem is tiny. So I'll make $1,000. I'll destroy for myself $1, let's say. That's my portion of the entire value I destroy. From a game theory perspective, my winning strategy is to sandwich. Okay, so it's kind of like classic tragedy of the commons. It would be great if nobody did it, but when it's my turn, I'm incentivized to kind of like, okay, yeah, it's good, nobody did it, but when it's my turn, I will just do it and make slightly more money. And this is the problem that needs solving. The short-term incentive. So it's kind of like sad. It's kind of like, listen, why do we always have tragedy of the commons? It's kind of like, everybody would be better if we do something else, and then nobody does it. So it's sad in that regard. But it also means that we only need to fix the short-term incentive. Okay, long-term incentive is aligned. Validators and stakers will make more money if they didn't do it. This is what they should care about. They have $100 billion bag of ETH or $60 billion bag of SOL. So they really care that in 5 years, they'd rather increase it by 1% than all the front running they could be doing. Okay, that's their long-term incentive.
What if people just view this like in the long run, we're all dead, and so we should extract now because tech improves, tech iterates, and there's no actual guarantee that should we stop extracting now, that this will obviously improve the value proposition of ETH long run or Solana long run. I'm just saying, like, if
so
how would you respond to that?
Listen, I tell them, okay, you tell me this, and here's what I'm hearing. Listen, I don't know if making DeFi more valuable with actual users and liquidity, if we could make it happen, again, assume we have a magic wand, we got rid of it. If that, and we'll get more activity and more liquidity, and it gets like more useful, if this is going to affect the price, like on the long-term horizon. If that's the case, I have no idea what you're doing in crypto and like you could be trading anything, sure. If you're a validator, okay, and you have large bags of SOL or ETH, usually most of these actors play a longer run game than the current money they're making right now. But it's kind of like, okay, if you don't think anything that we do here is valuable, and it's like, okay, we're just playing a game, you do it for the APY on it. You don't think that if we make Ethereum better, 5 years from now, in this imaginary world, okay, there's this alternative universe, not in a day, they'll still have cycles, we'll still have, blanking on the word, when people bet on stuff, and we'll still have speculation. All of that still exists, right? This would still go up and down like crazy, etc. But 5 years from now, in this alternative world, if we have more activity and more useful features and etc., you don't think the value will trickle into the at least 1%? And I think it should be like, imagine we have 10 times more activity and it's actually being used. Then I don't know what to tell you. Like, I think differently. I think most people think differently. But if you tell me you don't think there's any correlation between the two, then I don't have an answer for you. Then you should, do whatever. Don't do this. Play the game. Play the short-term game.
Thanks for listening to The Gwart Show on the Blockspace Podcast Network. Subscribe to our newsletter at blockspace.media to get the show directly to your inbox. Show links, transcripts, and Bitcoin articles twice per week. Stay ahead of the conversation by visiting blockspace.media.
Since the inception of Bitcoin, we've had the same rationale, right? Like, miners should, in theory, be honest because their profit is a function of how well Bitcoin does in the long run, for example, right? Like, they don't want to screw the network on the grounds that that's how they make money. Like, it's not entirely dissimilar.
I disagree with that. They do it because it makes them money. The idea is if no single entity has more than 50% of the network, then nobody can screw the network. If you go against it and you try to fork it, you do whatever, you will like the rest will just go in a different direction without you, right? You could try to fork it and create like reorg 2 blocks, but now you're in your own universe. Everybody else kept with the heavier chain. So it assumes decentralization, right? It assumes no miner has the ability to do that. And there are problems with the Bitcoin, like other issues with Bitcoin to consider. But I don't think they're doing it because they're honest. They should be selfish. Okay, they should.
No. I am. That's what I'm saying. Okay, sorry, I didn't phrase that correctly. They're selfish though because they have bought a ton of ASICs and they bought a ton of. They have put money into energy expense, and so if they screw up the network, they screw themselves. But they're being selfish in profit maximizing. I'm not disagreeing with that.
Right.
That was.
But even in a world where, we're back to 2009 or something, people run it on their CPU. Okay. Like no heavy investment in infrastructure to do it. You run it on your laptop. I run it on my laptop. 10,000 people run it on their own laptops, etc. It's not because you made the investment in the infrastructure that you're acting on it. Let's say there's zero investment. You run the miner and you have two options. Either to try to extend the longest chain or to ignore the latest block, maybe you did something or whatever and try to reorg and take the chain in a different direction. If you tried, everybody else are trying to make the chain longer in, let's call it the main path, the honest path. So you could go one step back and create a block that compete with this one, etc. But everybody else are pushing in the other direction. So unless you have the power to go in that alternative direction and extend it, therefore you're faster and bigger and better than all other miners combined, you have more than 50%, then unless that, they're just going to leave you behind. You create your own fork and etc. Everybody else follow a different fork. So it's not about the infrastructure investment. It is the immediate, your selfish behavior is to extend the longest chain and get a reward for that. Because if you extend a previous one, let's say the previous block, to go in a different direction and reorg the block, then you're just instead of trying to make money here, you'll make that and you'll be ignored and everybody else will continue on a different path. But that's a complete side note for a second. Let's take 3 steps back.
Okay. Go ahead.
What I'm saying and have been saying for a really long time, and this is kind of lead us towards Palidin, long-term incentive is a line. And the problem is the short-term incentive to front-run and sandwich, okay? It would be better for everybody, users, validators, stakers, if nobody did it. But at the moment, when I'm the leader and I'm the proposer, my winning strategy is to sandwich, okay? I will make slightly more money that way. And what we're trying and should be solving for is that incentive, is that alignment. Not to say, well, you know what? Some validators might do it or not. How about we make this the most extractive system? We make it less decentralized, MEV boost and PVS. Let's not let validators build their own blocks. Let's have centralized builders with backroom deals that capture all the value. It's hard for me to even understand how would people think that the PBS direction is the better world we want to go compared to, can we fix this incentive?
Okay, I want to ask you quickly about multiple concurrent proposers. This is the new hottest buzzword. What are your thoughts? Oh, well, actually, we talked about this before, but I talked to Max and then I said, okay, Max, I don't have enough knowledge to fight you, so I'm going to get somebody on here who knows what they're talking about and give the other side. So maybe if you have some criticisms or reservations or thoughts about the most recent hot discussion within Ethereum.
The idea, let's lay the ground for anybody listening who isn't totally in the weeds, okay? The idea is that instead of a single validator in each time, at any given, in each slot to create a single block, it's kind of okay, we're going to have multiple proposers. So let's say 2 or 3 or 10 or whatever number of validator who could propose a block, and the result is the result of all of them combined. Now, why does the Max love this solution so much? Because MEV extraction, or I think the reason he loves it so much, MEV extraction comes from the fact that at any slot, at any time, that single proposer or that single leader has monopoly. It could decide which transaction to include or not to include. So any DeFi trading app would say, oh, let's run an auction, okay, end this block. Whoever bids the highest price gets it or whatever. You could never run an auction because the proposer could leave transactions out. Okay, so the design is so that if you have a single leader, you can't really run an honest auction or something like that in the app layer because some bids will just be censored. So it could guarantee somebody wins. Okay, so as an example, let's say price of ETH shoots from 2,000 to 3,000. And obviously everybody wants to buy on chain, like ETH cheap, right? And kind of like, so it will get multiple bids, but the current leader was like, I'm going to ignore all the transaction trying to buy ETH on Uniswap and just inject my transaction to buy it really, really cheap. Like I'll try to buy it at the lowest price to maximize. And the app can't solve it because it doesn't have censorship resistance. So Max's direction is to say, listen, we'll change how apps, DApps, okay, decentralized apps, how they even work if we give them censorship resistance. If we give them that, they could adjust accordingly. And so if you have multiple proposers, like if you're not, let's say both of us are proposers in the slot, if you're not going to include this transaction, I will include it. And maybe even I get a fee based on how many, if you don't include it, you get lower fee. If I include it, I get a high, you won't get the fee, I will get the fee. And so the result would be, if you try to censor, you will fail. And also you won't make money. And so everybody are incentivized to include as many transactions as they could. And that will allow to change the design space of DeFi. Okay, that I think is kind of like direction and why he wants to see it succeed.
Yes.
It's funny. Solana actually came up with like multiple concurrent proposers, so MCP. I think there were discussions on like 2020, definitely 2021. It was already there.
Tolly says that Tolly's like taking a victory lap now that he's the first cited multiple concurrent leaders. I think, he's really proud of this. Go ahead.
But that's the tweet. That's like a year and a half, I think, after discussion really started. Okay. This has been going around, but Solana reason to do it is different. Okay, they weren't coming from there. They were thinking, if people send transactions right now, they're limited, right? If there's a single proposer, it might be on the other side of the world. It will take me 100 milliseconds to get it. And, if it's a round trip time, to get a confirmation that my transaction made it. But think about it. If you have multiple ones, then you're probably going to have somebody closer to you, like 10 milliseconds away. You could send a transaction, get a confirmation, and basically know that your transaction is included. You don't know the result yet because it depends on how you merge the block, but it's included and will be executed in 10 milliseconds or 20 milliseconds. So they were actually trying to improve latency even further, which is a different thing. I think, I'm not 100% sure, but I think Max is doing it only to solve MEV. It's not that I'm strongly against I think it's like a good direction to explore. But what he's saying is, let's remove the time direction or the time dimension from decentralized apps. So basically, everything is a batch. Okay, so like you have a block every 12 seconds, and they batch together. And so there's no came first, came later, pre-confirmation or anything like that. Basically, you get everything in a block. And in the case of DeFi, like there's a batch auction. Whoever, like you aggregate everybody, you make all the trades together, something along these lines. My worry is that that's not good enough to compete with CeFi. Okay, like if the end result would be better if there isn't any latency and just a batch, then this would have been what Binance is doing. This would be what the New York Stock Exchange. This would already be what DeFi is doing. They're not doing that. And again, my end game, the thing I want to end up being the result is DeFi competing with CeFi. I want price discovery in DeFi, not just to run behind CeFi. And in my opinion, it's not enough to bring us there. It's way better than making it the most extractive. I am not against it in any way. I'm not saying we shouldn't do multiple concurrent proposer, but what are we solving here? What I think Max is only trying to solve MEV. I'm not sure that's the best way to solve it. I actually think it's not the best way to solve MEV. But Max is saying, oh, ignore the time dimension. Everything is a batch. Okay, in Ethereum, blocks are 12 seconds, so yeah, shouldn't, like, maybe. What happens on L2? Should L2s do that as well? Should they get rid of the time dimension, or are we still happy with them being in the time dimension? Like, I don't have a. First of all, how you merge the transaction?
Yeah, well,
together,
I think that's the big question right now.
Right. That's like sure, it's an interesting. Like, what does it actually mean? What does it? Oh, we merge based on fee. Like, should people be incentivized to spend? There are a few questions around it. I'm not saying that he doesn't have decent answers to these questions, but like, what does it actually solve, and what doesn't it solve is my first question. Okay, like, it's not like it comes. It's super cool. It's cool. Let's start with the fact that it's cool. Like, the idea of having multiple concurrent. It isn't easy, and the hard part is combining these blocks together. How do you merge them together in a way that you're happy with the result?
The mini blocks. The mini blocks.
Basically, yes.
Block.
Like,
yeah,
you build
just to
something
clarify.
out. Yeah. Basically, they now need to send it to one another, and etc. It does help censorship resistance, which is super important. But are we just trying to fix MEV here? Are we happy with the result? This limits the space of applications to applications which are batch. There's no ordering in them. Okay, everything happens together, which for some things is fine, and for some things it isn't fine. So what are we actually? So it's not really like I'm not attacking this. Like, I'm not saying we shouldn't do it. I say let's be very, very clear with what we're trying to do here, especially back in the day when MEV became a thing and everybody like, well, we need a solution for it because people, there's now an incentive to reorg other like previous blocks, etc. Let's run PB. Like, there was a lot of like hand waving on what MEV boost does and it doesn't. That incentive isn't solved in any way. Okay, so still right now, if somebody made like a $10 million block because there was some giant liquidation and it's worth it, it's still the incentive of the next validator to try to reorg it and etc. MEV boost, the only thing that it did is to say, instead of some validators do it and others don't, and so, which is another psyops, okay? The fear was that some validator would make much higher APY and some would make a lower APY. So everybody will stake with the super extractive validators, and stake would kind of like centralize to them.
Yeah.
2.5 years later, if you run the most extractive MEV or whatever, you make 3.5% APY. If you run vanilla Ethereum, no MEV boost, no nothing, you make 3%. Okay, so it's the difference between 3 and 3.5% APY. The difference would have been even smaller if MEV boost didn't exist, because now we have private order flow. So all the important high-paying transactions don't actually get to the vanilla validators because they don't see it. And so all that is to say that what MEV boost didn't actually solve, what it solved was giving, let's make everybody super predatory. Let's connect this super extractive HFTs with all the validators so everybody could max extract. That was what it is. So everybody have the same APY. Now, again, we learned a lot in this time. Like, LST is much stronger centralization than anything. But like brand name, like Coinbase, much stronger centralization.
And
like,
the fees on Coinbase are evidence of that, right? Like, Coinbase charges a much higher fee, and there's like seems to be very little, it's very like inelastic, right?
Sticky. Like, would you move to somebody else? So, okay, but taking a step back, so going back to the multiple, like, let's be very, very clear here. What are we trying to do? What will we get from it? Okay, this is not the silver bullet that solves everything. Potentially, it's the thing that allows censorship resistant dApps, which opens a space to do all sorts of auctions. And again, Max is a game designer in a comment. Like, he loves auctions. And then we could, maybe he's right. Maybe there's a lot of value in that. In other things, there isn't value. What does it mean to L2s and stuff that move faster than 12 seconds? Because in order to run multiple concurrent, you potentially need more time to know what the end result is, blah, 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 etc. I would argue, just one last piece. My argument is, maybe in addition, but I argue that just incentivizing validator not to sandwich and not to front run solves MEV better. Okay, so if we're trying to solve MEV, this would be better. If we're trying to do something else, sure. If we want to increase censorship resistance, sure. But if we're trying to solve the MEV, then let's just incentivize validators not to do it instead of, let's change how Ethereum works.
Okay, let's hear about Palidin. Let's chill your wares, chill your new tokens.
Here's the thing. So as I said, I wanted to solve the short-term incentive to front-run and sandwich. Palidin, which again had multiple iterations, how do we actually solve it? It took a lot of time. Started to build it on Ethereum, but the auction mechanism is so ingrained in Ethereum that I found that it will be easier to build it actually on Solana. So building it on Solana, where blocks are continuously built, and I said, I wanted to see, how do I incentivize validators just to include them, act honestly, and not front run and not sandwich? And the solution has two pieces. First, for context, for people who aren't familiar with Solana, Solana has the Jito auction. Basically, copy paste the idea of flashbots into the Solana ecosystem. There's an auction. Everybody sent in order to touch any account, that's, there's a Sol USDC market or something like that. If you want to do that, there's an auction, 200 milliseconds. Whoever pays the most can send the trade to trade there. So my first thing is opening up a Palidin bot. It's an atomic R bot. It also could capture CeFi DeFi. And first of all, give it to the validators. Okay, we call them now Palidators. Okay, instead of auctioning the straightforward MEV, right? You could just pick, let's say differently. Most MEV is very straightforward. There's no secret sauce to finding atomic ARB on Solana and capturing, etc. Vanilla, pathfinding, iterating, finding arbitrage, creating, transaction capturing. The secret sauce is to hear about it and identify it really, really fast and then send it to the validator as fast as you can. But the validator, the leader, if I am the leader, I'm proposing the blocks. I could run the block. I could identify it myself. I don't need to outsource it to searchers who take a cut out of it and take 200 milliseconds. I could identify it and inject my own ARB transaction after each batch of transaction is executed before they even hear about it. Okay, in under 1 millisecond, I can say, here's the update. Where's the ARB? Here's the ARB. Let me put a transaction in, capture the ARB, and let everything else continue. So instead of outsourcing the really straightforward MEV to searchers, just take it yourself. Leave it to them to do everything weird or everything with risk, right? If something requires buying something, holding it for 30 seconds and then selling it, sure, leave it to them. But why outsource and why pay? Again, atomic arbitrage bots are making $50 million per year currently on Solana. So they're actually they're capturing a lot of money from running this auction. The validator could do it better himself. He could just pick it up. He will hear about it and execute before they even know there is an opportunity. And he could capture it on the way up and down and up and down and up and down in real time, always correcting the price. Why is that awesome? Because if you are the user and you just send a random transaction, you want to buy SOL for USDC, you will get the current correct price right now. Okay, the price is always corrected. If price shoots up on Binance, a market maker, send the bot a bid to correct the price. The bot will use it to correct the price. Whether it's CeFi, DeFi, whether atomic ARB, you always get the correct price. You don't have to have here's 7 monitors with the prices of different venues and where should I buy? You just want to buy SOL for USDC. So the first thing that you get is that price is always corrected as fast as possible. That doesn't solve the incentive I talked about earlier, right? That just like help them to make better. It only captures good MEV. It doesn't look at the transaction. It doesn't front run or sandwich. It looks at the result of the transaction, of the state after they executed. And based on that, inject its own transaction to capture ARB. And so that's piece number one. It only captures the good ARB. Now, let's go to the incentive. MEV, or let's say differently. MEV on Solana is $500 million per year. We're creating a token, the PAL token, okay? That PAL token is valuable. It's not a meme. It's not governance or whatever. It's cash flow, okay? Bot sends 10% of the MEV. So if everybody runs, it's like $50 million per year. Send that to the people holding the token. So this is a cash flow. It's not buyback. It's not burn. It's not something weird. Basically, take 10% of the MEV in Sol and send it to everybody holding this token. Now we take this, we create it on day one, and we airdrop half of it to the validators. Okay, so if you're a large validator, you have 1% of the stake, you just were airdropped 0.5% of the token. Wait, Uri, this sounds like you're moving money from your right pocket to your left pocket, which is kind of true. Okay, what did we do here?
Nice.
We took some of the value and we moved it to a token. This doesn't create any value at all. We didn't create anything valuable here. But what we created here is collateral. Okay? If this is a $50 million per year cash flow, how much is the token receiving it worth? Going to be speculation or whatever, ignoring all of that. Let's think, DCF, discounted cash flow. Okay, current interest is 5%. So how much is this token worth? Based on this math, $1 billion. Okay.
Wait, can I interject right quick? You said you're airdropping half. Where's the other half?
So we're taking 50% to the validator. They get its stake. We'll get to that in a second. Another 23% literally to every single builder on Solana. My BD work here is I want to give it to every single team, every member of every team. So I don't want to give it, let's say, to Phoenix. I want to give it to every dev and every BD guy and every single employee of Ellipsis Labs. Okay, so
they're good.
23%.
Good guys.
Yes. Everybody
some of the smartest.
Yeah, I really like Eugene and Jerry, but like Eugene is usually my go-to guy. So we're airdropping this. 7% go to like an evergreen dev fund. We'll talk about it, etc. Team keeps 20%. Before talking about the allocation, but for a second, we took the funds. 10% goes here. We created a token which received this fund, and its value is some multiplier of this, right? If you do discounted cash flow, then this token is worth $1 billion. Maybe you think it should be higher. Maybe you think it should be lower. Okay, maybe if you think MEV will get 10x bigger because we're trying to improve the activity and liquidity, then this would grow bigger. This is a cash flow. Okay, now if you are this 1% validator, you got airdrop 50%, sorry, 0.5% of the token. If this is worth indeed $1 billion, you were just airdrop what? $5 million.
Yeah.
Right? Yeah. What? Yeah. $5 million. Okay. And proportional. If this is worth $10 billion, then this is $50 million. If this is worth just $100 million, then this is like only $500,000. But these are the numbers. So I will airdrop you millions of dollars. And the idea is this. Validator gets this token, a lot of it. They get it staked. What does that mean? Two things. A, they get more money out of it. Okay, so random person holding the token get 5%. Validator holding it gets something like the equivalent of 15%. We can talk the numbers in a second. But basically, it pays more money to the validators because it's really their money. So if a validator made $100, $90 he just takes to himself, like regardless. But 10 he passes through here and actually to his other pocket takes 7.5. So it keeps to himself 97.5% of the MEV it creates. But it gets a collateral. That collateral makes it money. They can't unstake it in one time, only 5% per month, like for a really long time. But the key here is these are the carrots. The stick is if it misbehaves, if it front run, if it tweaks the Palidin box to inject its own credit, if it does anything, which isn't just run Palidin, the other validators with the stake pal could slash him. Okay?
Like,
so
but is it subjective slashing? Like they can choose to slash?
They can choose to slash. Majority, there's no proof. There's no there's no proof that somebody front ran.
Yeah.
If majority of the others think you're cheating, they could take your money. And so remember, we're trying to solve the short-term incentive to front run and sandwich. At any given time, you can cheat. I can't prevent you from doing it. But if you cheat, maybe you'll make $1,000, maybe you make $10,000, maybe you make $100,000. You'll be slashed whatever amount of PAL you got. You know what? I want to add to that, but a bit more context. The high-level idea is to create this pack of wolves mentality. Okay, instead of strategy of the commons, oh, it would be great that everybody did it, but when it's my turn, I'm incentivized to do it. We move to this, just run with the pack, get your share of the money. It's good for everybody else. You were airdrop shitload of this token, etc. If you go against the pack, everybody will kill you and take your meat. Okay, so you lose that, you lose future cash flow, blah, 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 etc. So we don't create value in moving that value to a token. Okay, funneling that money doesn't create any value. It actually loses you a tiny bit of the MEV, 2.5%. But what it creates is almost a restaking token. Okay, it's a collateral to incentivize you for a specific behavior. Just run the bot. And so let's say you're that validator, and I'm telling you, let's say we're using the DCF. Everybody could value it however they'd like. Let's say we use a DCF. So if it's $50 million, then it's worth $1 billion. You got $5 million off this token. You don't have to run the bot. You also don't have to run it honestly or etc. If you don't run the bot, the other would slash you and take away your PAL. But you're probably thinking, you know what? I don't believe in this Palidin thing at all, right? Like this looks like complete BS. But even if I don't believe in it, how about I run the bot? I'll take 5% and I'll sell 5%, right? You will make more money by acting honestly, keeping that PAL, even if you just want to sell it. And I'm okay with it. This doesn't break the system or the incentives. And so we airdrop to all the validators, and their incentive is, you know what? I don't know if this thing is going to work, but I was just airdropped shitload of money of this thing. So let's run the bot just so I could sell it 5%, wait another month, sell 5%. You do this for let's say 12 months or whatever. We'll talk about it in a second. So the idea is that the more validators who do it, the more valuable the token is because it gets this cash flow. And so if you take this interaction to its end game, everybody do it, everybody act honestly, and even let's say validator take it and they sell the token in order to and sell 5% per month. So let's say you do it for 12 months. You've sold 45% of all your token because you always sell 5% of the reminder. At some point, you're going to ask yourself, should I cheat? Right? Maybe my amount of PAL at this point is, should I cheat and start front running and sandwiching? Here's what's going to happen if you cheat. First, you'll be slashed this PAL. Okay, so whatever amount of PAL you have remaining there, you'll be losing that. Also, as you sell PAL, the less and less cash flow you're getting from it, and the more the bigger the cash flow that goes to everybody else, but glazing over that. But the real thing here is, if you do that, and you front run, and you sandwich, and you cheat, and you get slashed, then maybe the RPCs are going to say, you know what? This validator cheats. Let's not send him our user transaction. Okay, Tolly had been tweeting about it. Mert had been tweeting about it. Basically, why would RPC take their user transaction and send it to a validator that screws them over? Wait 1.2 seconds, give it to the next guy. Some things are fine, but if it's a DeFi trade and you know this user going, so what could happen, not necessarily would, but potentially could happen, is you do this, you make the $10,000 or $100,000, you make the sum, you lose your PAL, and maybe RPC stops sending you transaction. Maybe your APY grows lower. Maybe your stakers leave you and go to somebody else who has a higher APY because he's getting more transactions. So you could do this. I could never prevent you from doing it, but it looks like a really dumb move from where I'm standing. Yes, you could cheat, but would you? Okay, you'll make another, usually $1,000, $10,000. That's usually the higher numbers, and risk your entire validator like business for it. Most wouldn't. I would even argue that nobody would. It just doesn't make sense. Just run the bot. You got airdrop shitload of money. It's good for you long term. Your end game, if you're the validator and have shitload of SOL, your end game is just to get more activity, more liquidity, and for SOL to go up. As I said, price of SOL going up 1% is like more valuable than 6 years of front running. Okay, front running isn't that big. It isn't worth it. Just run the damn thing. Enjoy the free money that you got. Enjoy SOL getting better. That's it. And so this is the Palidin idea. Okay, we built it. By the way, this is not part of BloxRoute. It's like its own entity built by different people, etc. It just came from my mind thinking about it for like 2.5 years. But the idea is to align the short-term incentive. So at any given time, you're incentivized not to front run and not to sandwich.
Okay,
does that kind of make sense?
Yeah, but I have some questions. Just like I'm gonna try to poke holes on this. Why does it need the PAL token when you could ask somebody to run the PAL bot, Palidin bot, and just stake SOL? So why can't the bond be SOL?
Excellent question. So here's it has thanks, you're welcome. There are two parts to the answer. Okay, the first part is we're going to release the bot. You can run it. It will make you more money with the current mechanism. Ignore I'm going to airdrop. Ignore it. You'll be slack. You really don't have to pick up the PAL, right? Just run the bot. You'll make more money. That's totally fine. You don't have to in any way. I'm going to airdrop you really big amount of PAL for it. If you're going to run the bot anyway, you could keep it by running it honestly. Most don't front run anyway. Most validators don't sandwich anyway. So you're not really losing anything here, but you're losing the ability maybe to do it. Okay. Or if you wanted to do it, but that isn't big money compared to the amount of PAL you're going to be airdropped. And so up to you. You don't have to run the bot, but you make more running the bot. You don't have to really, you could let your PAL be slashed and be taken away not to participate, but you'll probably make more money participating in this thing. And the last piece.
Wait, one quick question. It redistributes. Wait. Go ahead. Fine. Go ahead.
But I want to add, so the answer has two pieces. So one of them, you really don't have to. It just makes economic, we're speaking with Validate. Oh, do you want anywhere 5 or maybe 50 or maybe, crazy world in which is this is worth 30 billion, $300 million. Do you want to get millions of dollars? And the answer is usually yes. And again, this isn't a meme or a governance. This is cash flow. How much it's going to be worth is going to depend on how many people run it and how much value it captures. To your second piece, why do we need a token for this? Is because we can't slash SOL. Okay, this is a restaking token, at least philosophically, because I want to incentivize everybody to do this, and I want to punish them if they don't. Now, I can't slash the validator and its stakers. Literally, technically can't slash their SOL.
No, okay, but you could create Palidin bot and have validators opt in with SOL to the slashing mechanism. Why not? Not
You're
the SOL that they're staking, other SOL.
But you will need their delegators to do it. If I do that, then I am a validator. I would run this thing, but take all my SOL and put it as a delegator to myself, right? I will delegate it for myself. So I don't only need buy-in from the validator. I need all the stakers of SOL to buy into it. I don't know how to do it. Let me think if I can do it. Can I have them, or I will need them to undelegate and redelegate
Yes.
to do it.
Yeah. Because okay.
I don't know that I can make them do this.
No.
This thing is very easy in terms of like getting traction. I just give it, you keep running Jigo. I'm not changing the system, but it's a good point that you're bringing. I'm not changing the system. You say like, instead of doing that, can we have a smart contract, like a restaking smart contract?
Yes.
In which all the validators and all the delegators allow for their soul to be slashed.
Not necessarily the delegators. Like, let me give just a random example. This is not, I'm spitballing here. Okay. You have a validator, and I'm making up numbers because I don't even really know like the validator, actual margins. But let's say a validator makes 10% and they pass 8% of that on to their delegators. Okay. Once again, making these numbers up. So they're left with 2% profit margin in theory. Okay. They take 1% of that profit margin, stake it, run Palidin bot, and say, if we engage in nefarious activity, we can put a smart contract.
This is, tell you, that Solana stakers has $60 billion worth of SOL. So for them, increasing the price of SOL by 1% is worth way more. Like the front running, the 100 million per year, is 0.15% APY. For them, it's tiny. It is not tiny for the validators. The validators don't have 60 billion. They don't have 6 billion. I'm not sure they have 60 million. Okay. They have, 600. They probably have 60 million. Okay. They have, like, for them, for the validators themselves, front running is big money. They don't have enough stake in the game. Okay. They would, like, if you have $100 million, if all the validator was like one single validator with $100 million worth of SOL, would you risk that to make another $100 million per year? The answer is yes. Like this would double your money. The real money, the real incentive is aligned long-term for the delegators. Okay. So I need the stakers to buy into it. Okay. So I could build a smart contract that let all the SOL be slashed to make them honest. My question to you is, do you think the stakers with $60 billion worth of SOL would allow arbitrary other people to slash their SOL?
No, but I mean,
the
it's
answer
sort
is
of
no.
Right. But okay. This to me, like, I mean, don't get me wrong. I love people just like eating shit out there. Don't get me wrong. Okay. But I like
to argue. Like the reason I did the token.
But we're concocting value out of thin air, and there is, like, it redistributes MEV amongst those who have Palidin, right?
So here's the thing. No, here's the thing. We take 10%. So let's say you're the leader. First of all, you take 9% to yourself. Then there's 10% going to everybody. 5% of these 10% go only to validators and their stakers. Okay, so you've got stake down, only you get it. So it's 5%, not going to 100% of everybody, just to the 50% that got airdropped. So this is literally them moving money from left pocket to right pocket. Okay, this is them still getting it. It's like a smoothing mechanism. When you're the leader, you get slightly less. When somebody else is the leader, you make also money. So this doesn't change their profit in any way. Then there's 5% that does go to everybody, but we airdrop them 50%. So they're getting 2.5% back through that pocket as well. So they leak away 2.5% of the MEV. Not of the entire reward, because the entire MEV is small. Yeah. They leak, that is the cost of the system. It is a real cost. We funnel it through this pipe, and that pipe is slightly leaky. It leaks away 2.5% of the MEV. What we're getting here is the collateral. This is like the idea. The real value is in correcting the front-running incentive, and the idea is, can we get rid of it so there's more value to everybody's bag of SOL? Now, it's not even costing them money. This is why we're giving the bot. They're actually going to make more money. right? I will give you the bot. The bot is better than the card mechanism. It takes this and don't outsource don't outsource the straightforward MEV. Pick it up yourself. Only outsource what you can't pick up yourself. And then from there, you could have made more money by front running and sandwiching or whatever. But really, you funnel it this way and to the token. And the real value is from aligning the incentive. Okay, by sending it this way, we're mostly moving from left pocket to the right pocket and dropping a bit of crumbs along the way, really tiny amount. The result of it is fixing the thing that Max wants to change the entire thing that Ethereum wants to do. Or like the idea is, if we make DeFi better, again, we get more activity and more liquidity. If it increases it by 0.1%, it's already worth it. Okay, if it increases it by 1% in the next 5 years, it's worth it. And so that's the idea. Now you're saying, Uri, do you really need a token? My answer is yes, because I need to be able to slash validators if they meet the I need to make it hurt. I don't have the ability to do it. And one last thing, in the tragedy of the common, right? The original example of tragedy of the common, imagine there's a green field in the middle of the village and everybody bring their herd there, but everybody overgrazed because it's everybody. So the entire green field is eaten and everybody needs to go elsewhere. If everybody didn't overgraze, everybody's benefit would be better. What Palidin does is give everybody sticks. Okay, basically, everybody here, if anybody cheats, we beat the crap out of him. Okay, and that's the mechanism. We give them sticks, so if anybody misbehaves for their common purpose or common goal, they hurt him. It makes bad for him. So everybody, speak softly and carry a big stick. That's what everybody are doing here.
Didn't the Solana Foundation already take away delegated stake to validators who were sandwiching and engaging in
but that's
malicious community?
I think they have a total of 1% of the, this is a tiny amount. The Solana, it matters if you're a tiny validator and you start to bootstrap and the cost of the value doesn't even pay its own cost. That's a tiny percent of it. Jito actually, they turned off the mempool, but the cat is out of the bag. So, some other people injected it back, right?
So, let me ask another question then. Why can't this be solved at the RPC level? Why can't they just stop sending, why can't RPCs guarantee for their users that they just won't send transactions to these?
Palidin becomes the signal. Is this guy cheating or does it have shitload of collateral not to sandwich you in front of your user? It becomes a signal you could use in order to identify it. Okay, so currently, the idea is to spin the... A, it's like a fact. B, currently, if everybody do it, and Jito allowed for front running and sandwiching for a year, okay, that, spin the flywheel. This is why it's so important to get things moving. Spin the flywheel, make everybody act honest, and then everybody defecting, he will be punished significantly, right? If everybody are honest to begin with for 6 months or 12 months or whatever, later deciding, I want to cheat and screw users, then it would hurt and they won't do it. So basically we're starting this new pack of wolves dynamics instead of the current, everybody, the current tragedy of the common, everybody extract the most value.
Is the token, you said it's going to be validators get this staked. Is the token liquid outside of that?
Yeah, so
when you have free floating token though, you see what I'm saying? When you have a free floating token outside of the staked amount, a lot of the cost benefit is going to be contingent upon the value of the token outside of the stake system.
So yes, but if this was meme or this is worth 0, it's probably, this is a cash flow. If you're a validator, you could think for yourself, how valuable is the cash flow? And calculate, I expect price to go up and then go down and then go up and then go down and then go up and be super volatile. We're going to air it off to people. And for the record, we're creating this thing, we're bringing it to the finish line, and then we stop. Okay, for this to actually work, I'm not labs, I'm not a foundation, I'm not building UI, I'm not maintaining it, I'm not developing it. I mentioned earlier, there's 7%, which is kind of evergreen dev fund. Anybody could start a foundation. Anybody could build a dashboard to show how much value everybody could do and get paid for it from the dev, which is from the dev fund, which is controlled by the validators, by the validator running it. That's them. We're bringing it there, and then like everything could happen. Or I'm not market making it. I'm not listing it. I'm not doing any of it. Everybody will be airdropped. Everybody could decide what they want to. Anybody who wants to sell it immediately could sell it immediately. Anybody who wants to buy because he wants exposure to MEV directly, not like a meme, literally get a piece of the 10% of the MEV would buy into it. And the price will be determined by the market or whatever. The end game actual value of it is the cash flow. If the cash flow grows 10x in 3 years, then it will be worth 10x. If it grows down 100x, then it will go down 100x. That's the real value. Speculation will happen. Like price will jump up and down and up and down and up and down. I think there's a demand. People would be happy to buy into like, exposure to capture actually a piece of the MEV action and getting rid of the front running sandwich. So the idea is to grow activity and liquidity. But, I don't know it any better than you. My job, what I'm trying to do literally here, I'm aligning the incentives. Here's how the entire system works. Here's how the money flows. Here's what I think people would do. Here's what I expect them to do. You can do whatever, pardon my language, you can do whatever the fuck you want, okay? Permissionless, distributed, validated, can run it or not run it, run the bot, not run the bot, tweak the bot, /run it. They could do whatever they want.
Okay. We were supposed to keep this around an hour, but it's just too good. I got a couple more questions.
Dude.
You were talking about the slashing, right? So if there's some majority that infer that there is a malicious validator still engaging in nefarious MEV, they can choose to slash. Okay, what are the conditions around this, and have you fully fleshed this out?
Excellent question. The idea is that this is not a governance mechanism. There's no forums and stages or whatever. There is one single function, slash. Okay, and so now crypto is a safe. If somebody goes online and posts like, listen, when I send my trades, somebody gets ahead of me in 2% of the cases, but anytime I send to that validator, it's 80% of the cases. This guy is cheating. Okay, and make a fuss about it. Or somebody leaves the team and tell about it. The risk is just too high. So the idea is majority of the state pal could vote to slash any amount. So they could decide on the amount, any of the state pal. If you just got airdrop, your pal, which isn't staked, can't slash. It's permissionless, it's yours. But staked pal can, and they could slash one another. If you think somebody should get slashed, you should go to speak with the other, try to convince them or whatever. There is no forum, there is no governance, there is no foundation, there is nothing like that. But let's say you're cheating, I'm like, I should slash you and I will have more for myself, right? If you're misbehaving, you're hurting me and you're hurting the entire pack, we should slash you. Okay, so I have an incentive. It's not like governance numbness. What do I care? I'm not voting on it. It's if I slash you, you now have less and I have more. So my percent of the 5% gets bigger. And so that's one thing. I think the coolest dynamic though is, but wait, let's say you're an honest validator. Okay, you're good. You're not doing anything, but I'm a malicious actor. I say, let's try to slash you. How can I convince everybody else to slash you so we have more? So I go to my friends with all the big validators, etc., and tell them, let's slash this guy. Okay, I think we should slash him. If I go to them, what they really should do, if they collaborate with me and collude with me, it's risky for them. But what they should really do is turn against me. They should slash me for it. They're Uri is trying to cheat. Uri is trying to get us to somebody else and slash me. They'll get all the benefit without the risk. And so, kind of as I said earlier, I expect everybody to be very polite and speak very softly and carry a big stick. Anybody who get everybody else to think that they're cheating is risking a lot of money. Okay, whether that's the PAL itself, whether that's a future cash flow, whether that's this idea that RPCs would stop sending you order flow and transactions, so APY going down, blah, blah. So just run Palidin. Just run the damn thing. It makes you money. You don't need to be smart about it. Don't be smart about it. Just run the damn thing. If you want, and there are some really there's the Margin team is super smart. Trident team is super smart. Hill is obviously super smart. If you have ideas, let's play around with the algorithms to improve something, etc., you're more than welcome. Announce it out loud. Don't try to increase your slice over everybody else. Say, I'm going to try this thing. Here's what it is. So basically, because you don't want to get slashed. You don't want others to think you're dishonest. Do this. Share the result. If it's actually good, you actually made it improve. Share it with everybody else. Everything is open source, whether that's the client, whether that's Palidin. But to do everything in the open, be very, very polite to everybody else, and everybody makes money. That's the entire idea.
Let's go back in history for a second. You proposed the Ethereum gas limit token, which was, broadly speaking, an attempt to align incentives in some capacity. What was that? How would you compare it to Palidin? That wasn't two questions. That was one question.
So I see people now post, oh, we should increase the gas limit, and like, why we should have vote on it. I'm like, listen, I built a token, Eagle, right? The Ethereum gas limits token was the idea. Here's a token where people can vote to increase or decrease the gas limit. And I'm actually blanking from the top of my head. How are validators, how are they incentivized? Basically, they would get Eagle. Oh, I remember. They would get more Eagle if they pushed the gas limit in the direction that they were asked for. So basically, people would vote. Validators don't have to do anything, but they would. Back then, it was even miners, I think. Yes.
Yeah, I think it was.
Miners don't have to comply in any way. There's no stick. But if they do it, they'll get more of this token. And if they don't do it and they push it in the different direction, then they get less of it. And the idea was like, can we move this decision to everybody's decision? Okay, so everybody gets a token. And this was a shitstorm. Okay, I did this. Nobody cared. And then I think it was a Friday, and the gas limit moved from 30 to 30.1. Okay, validators or Eagle holders voted to increase it, and it nudged up. And then all hell broke loose. It's kind of, this is terrible. Peter Zilagi from Geth, who I admire, he's a great guy. He's like, if this is happening, like, I quit. I'm done. Like, I'm not working for people to vote on this thing with a token. And all core devs were kind of like, oh, we should put the gas limit in. If this works, we put it in protocol. We nuke it. We take this ability from miners to decide what the gas limit should be, and we just put it in protocol and we decide on it. So this was like a giant pushback from the Ethereum community. This is funny, though, because a year later or so, then with Flashbot and MEV, we're now outsourcing the entire thing. Which transaction to include, which not to include, what's in the block, what's not in, and that's fine. Nobody cares. That's fine. So, okay, voting on should we slightly increase or decrease, and giving let economy, like the economics of it, to be decided where it should go. That was a terrible idea and a scam. But let's outsource the entire who builds a block to centralized. That's fine. So that got me really mad. But I think the interesting thing here, when I did that on Ethereum, that was a pushback that I got. When I came up with the Palidin idea, when I landed in the current design, I invited Tolly and Solana Foundation and Labs and Fire Dancer and a few other people. I hosted a dinner. Here's a thing. I want to do it. What do you think? Tell me why it's bad. Tell me what's bad. If anything is a concern for you, thoughts. And we talked for 2 hours, and people got excited. Oh, this is cool. We should try it. So I think
because they get another token. Because they all get another token.
I don't know how much money Solana, Anza, I forgot to mention Anza. Anza, by the way, helping design the token. Okay, so using a token extension, blah, blah, etc. No, I don't know how much exposure they have to Sol. I assume they're big, they get paid a lot, but I have zero knowledge of it. I don't think that's it. I think I actually put this thing might work to solve this. And I don't think they were as excited about the fact that it solves it. Does it? Doesn't it? They don't know. But should we try to do something like that? I think they're excited about experimenting with it. Let's try to do something here that works and solve it that way. And that for me was a very stark contrast between building something at least similar in heart. Let's try to fix something in the mechanism with a token on Ethereum versus to do it on Solana.
Yeah. Okay, last question.
Do you promise? Is it really the last question?
Yeah. I think an hour and a half is perfect. What are your thoughts on stake weighted QoS, and also just kind of your intuition about the trajectory of Solana? So, like, I'll give one example. I talked to Mert, and he said that FireDancer does not have, to his knowledge, stake weighted QoS like in the implementation. So I guess I don't know anything about FireDancer really, apart from maybe they think they can just handle a barrage of transactions. What are your thoughts on, like, I hate using this terminology, but like the transaction supply chain maybe on Solana and stake weighted QoS?
So stake weighted QoS is a naive but maybe just good enough solution to say, if you're the leader, you don't want to be bombarded with like stupid transaction and valueless transaction, and you want the really high value transaction. And if you get rid of the low quality ones, you'll have more time and bandwidth to accept the higher paying ones. And so you want to give to people, maybe let them pay you for it, to get the stake weight, like basically to give you the good transactions. Now, a very naive way to do it, let's give it to the other validators. They probably made, maybe they're an RPC who run its out validator or something. Maybe through them, I'll get the high quality and just from random people out there. Now, I think people overestimate the value of optimization. That's also part of my problem with the MEV auction. Let's try to you could probably do better. What if we let people buy bandwidth with one way or another? So not only like people would actually pay for it. So then those who have the most valuable transaction can pay to buy a slice of the bandwidth, blah, 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 etc. Now that I wonder if that's what the thing that Margin are building, now that like I'm saying it out loud. You could do that. I would argue that stake weight, that would be better than stake weight QoS. But I wonder if stake weight QoS gets you 80-90% of the way with a very simple thing. Basically, just let the other connect to the other validator based on their stake, so you don't have to engage in selling your bandwidth or whatever. So that's really like on the stake weight QoS. We at BloxRoute actually like our best service is to land transactions. So we actually I pay to validators to send through them. So instead of them needing basically the stake weight QoS, you don't need to replace it because like based on how much stake, like people would pay you to send through you. So we're paying to let me send this transaction through you. And if we make $1 from it, then, you'll also make it, like we'll split it with you or something. So basically, if we try to land transaction as fast as possible, we know who we need to speak with. We'll try to send it through validators. We won't send it to all of them. We'll pay them for each transaction that we send to them. So it kind of like build this nice network of, if I want to land transaction, I'm willing to pay for it. I will send it directly and through Jito and through the stake weight QoS, etc. I think it's a pretty good setup. It is not optimized in any way, but feels like good enough to land transaction at this point.
Yeah, but how do you feel about this being good enough for a company like you? Like, maybe take the other side of this, and is this centralizing insofar as there aren't that many providers maybe that can now access consistent transactions like BloxRoute can?
So I think it's going to, I think in the short term, actually, I think this would land into improvement to the network stack of Solana and the way it handles transactions. So for most cases, people just send the transactions. Like what we do for some of our users is basically they land in like 96% of them, but they don't want 96% of the cases. They want 100 with no dip, right? It could be even 99%, but every so often they have a giant dip. That's a no-go for them. They want always to land, always, no matter what, and they're willing to pay for it. It's worth it for their users, it's worth it for their money, etc. So for most people, just sending the transaction just works. It's good enough. Send it and land it, and it's being improved with the network stack and a few other features. And so I don't think most users will need us, which is bad for me. I will make less money, but that's okay. But a subset of them would always say I don't want 99%. I don't want even like, it could be like 99.5, but the dips are big and stuff that they're unwilling to accept. I want a flat line, which is literally 100% all the time, no matter what. And so they would use us, but this is like a very specific like type of user and customer. Most others really don't care. Like when I trade, when I'm like, I don't know, in Jupiter or on Zeta or wherever, like usually it just lands. Like I don't need BloxRoute service.
Yeah. Okay. One last question. I said it was the last question, but it's not.
I knew you were lying.
One last question. How do you print a fat stack mining ore? I know you guys were doing this.
If you're mining ore, you should DM BloxRoute to help you land your transaction because it pays you more money. Like you'll make more that way. That's it. Basically, basically, again, we have an infrastructure, hundreds of nodes connected and through validate and through, like we really try to send it in all directions to make sure it always lands. In the case of ore, the faster you land it, the higher the reward. So if you're mining ore, again, DM BloxRoute on Twitter or whatever. Like we got an uptick of activity. I also like Hard Hat Chad is also kind of like I like him and he's nice, so it's kind of like spoke with him. Maybe we'll collaborate or something if there's a need from the community. Like could we all get something? Then ping Hard Hat and tell him that you want it. But you could just DM us and like figure out a way to help.
Awesome. All right, Uri, that was
Gwart. This was fun. Thank you so much.